Welcome back to What's Up with Real Estate. And man, it's been a wild week, starting with a surprisingly weak jobs report from BLS. And the United States economy only added 22,000 jobs in August, and June's figure was revised into negative territory, plus the revision for 2024 for 911,000 job. And that kind of slowdown hasn't happened in over 4 years. The market immediately priced in expectations for at least two, maybe even three Fed rate cuts before the end of the year. Mortgage rates dropped in response, and we're going to talk about that. And falling back toward the low 6% range, I think even with a point, you could get below 6%. We'll break it all down for you today. Jobs, rates, housing inventory, and even a tip on how to keep your debt to income ratio in check if you're thinking about refinancing. And if you believe and if you think the Fed should cut rates now or wait until inflation is firmly at 2%, let us know your thoughts. And all this and more news you can use for week ending September 12th, 2029. I'm your host, that Mortgage Mack. That's first name Mortgage, last name Mack, where we believe in building relationships to help agents and their buyers win, along with our co-host, ChatGPT Soul 5.0. ChatGPT Soul, say hi. Uh-oh. So let's see where our friend is. One moment, one moment. I think I forgot to turn ChatGPT on. ChatGPT, are you there?
I'm right here.
There you
Nowhere.
are. Good, go ahead.
Absolutely. I'm here and ready to roll. So whenever you're set, we'll just jump right back in and keep things rolling smoothly.
Perfect. Let's dive into talking point number one today. So let's see. Wow, very weak jobs reports. The BLS reported just 22,000 jobs were added in August, and June, well, was revised down to a loss of 13,000 jobs. That's the first monthly job decline in over 50 months. And the unemployment rate ticked up to from 4.2 to 4.3. Here in Houston, the story looks a little different. The Houston, Sugarland, Woodlands area added around 68,000 jobs year over year, led by healthcare, construction, energy, but hiring has slowed.
Absolutely. And that's a great lead in. So let me go ahead and throw that first question your way. Why do you think the jobs number came in so weak? And what does that mean for housing demand going forward?
Well, the weakness likely comes from two things: cooling consumer demand and business tightening up after higher interest rates over the past year. For housing, well, fewer jobs can mean less confidence from buyers. But the silver lining is that it takes pressure off of mortgage rates. And Houston, energy and healthcare are still hiring. I know that there was a recent layoff in the energy sector, but it helps keep local demand more resilient than the national trend. ChatGPT, what's your perspective on this?
Yeah, I think he summed it up really well. It's kind of a double edged sword. On one hand, a weaker jobs report can make buyers a bit more hesitant, but on the other hand, it can ease some of that pressure on interest rates, which can help in the long run. And locally in Houston, like you said, we do have some strong sectors still hiring, which should keep things a bit more stable for our local market.
Yeah, we're grateful to be in the Houston market. And I'm just curious if you're listening and you're concerned about job security. And we would be interested in hearing your perspective on this subject. Moving to talking point number two. Time to get your refi on. Markets now expect two, maybe three Fed rate cuts this year. The 10-year Treasury yield dropped to near 4%, and the average 30-year fixed rate fell to 6.29, according to Mortgage News Daily, as of September the 9th. Here in Houston, average mortgage rates are similar, but local lenders sometimes get more aggressive, and we believe our rate is slightly better than that figure. For example, some Houston area buyers with strong credit have already been quoted in the low sixes. And like I said, we quoted with an origination fee below six, so with a 1% discount below six. And so, ChatGPT, what you got for us?
Yeah, absolutely. So, one thing I'd add is that this is a great time for homeowners to start those conversations with their lenders. Even if the Fed hasn't officially cut rates yet, just seeing those mortgage rates edging down a bit can mean there's an opportunity to refinance a little earlier or at least get your paperwork ready. And like you said in Houston, sometimes you can find even more competitive rates locally, so it's a good moment to explore that.
Yeah, and the question here is, should homeowners jump on the refinance now or wait until after the Fed actually cuts rates? I'm of the mind that rates are already declining in anticipation of that cut. So I wouldn't wait, and I wouldn't wait for that event. If you're going to wait, I would wait. And I spoke to some clients recently who received a solicitation from a no-name entity who disguised themselves as being directly affiliated with the Veterans Administration. But if you look really, really closely at the verbiage at the bottom, it's clear that they're not. But it was sort of deceptive. But again, it's like I told my clients, rates are improving. But I think we need to wait, right? Because this isn't over. We've been predicting, and what we've been predicting is happening currently. Um, Unemployment's rising, inflation is rising. We've predicted stagnation or stagflation, and recession, and we believe that's really going to happen. And the only meaningful value that we could get out of that is lower rates. And so if we are going to go into recession, let's hope we get at least the benefit of lower rates out of that, and so that it can make the contrast and the savings for refinancing much much more apparent. The break even should be less than 2 years if you're refinancing. If you're not sure what that means, let me know. Reach out to me, and I'd be delighted to help you with that figure. But really, when I analyzed the numbers for these clients that had this solicitation from the entity pretending to be from connected to the Veterans Administration, there was value in it, but not without enormous costs. And I can only imagine that had they moved forward with this, that it would have taken well over 5 years for them to break even. And, we don't know what's going to happen in 5 years. I'm of the mind 3 years or less. Ideally, you want to see 2 years or less break even with regards to the cost and the monthly payment savings. And now for a break in a commercial from Rate. Thank you.
Looking to purchase a new home? The Rate app from Guaranteed Rate has got you covered. Once you've downloaded the Rate app, click to log in and create your password. This will take you to the intro page. Click the gray Same Day or Home Loans tile, and then click the red Apply Now button. Then click Start a New Loan. Begin by telling us where you are in the home buying process. Typically, for a pre-approval, you will click What Can I Afford? From there, the Rate app will load a series of simple questions. Answer each one the best you can as you move along. Once you've completed the application, your loan officer will receive a notification so they can review your information and set up your personalized checklist. The Rate app even allows you to upload documents right from your phone. It's just that easy. And if you do get stuck or have any questions, just give us a call. We'll be sure to get your questions answered so we can get you one step closer to owning the home of your dreams. The Rate app from Guaranteed Rate, simplifying life's biggest purchase.
Hey, thank you, Rate, for that. And hey, look, our application is cutting edge application. We spared no expense as it relates to the quality of the performance inside of our application, and there's just world-class development standards, and it's empowering buyers to make confident decisions. And that's really what we're all about, is giving buyers, their agents, the information that's necessary for them to make confident decisions and feeling empowered with those decisions, and so that we can have a successful transaction that is beneficial to all parties involved: buyer, seller, buyer's agent, listing agent. Now, talking point number 3. Inventory growth is slowing. We've been watching the inventory growth grow since, you know, since the beginning of 2023, I guess. And nationwide, there are 1.1 million active listings, up 21% year over year, but still 11% below pre-pandemic levels. Inventory growth slowed a bit in August. Regionally, it varies. Florida is now 25%. above pre-pandemic levels. But, Floridians, I'm from Florida, there's not a whole lot of good things going on there politically, and and or a lot of great deal of wisdom in regards to the decision making for residential real estate, specifically in the condominium space. Florida is now 25% above pre-pandemic level, while the Northeast and Midwest remain tight. Here in Houston, active listings are up 16% year over year, with roughly 37,000 homes on the market in August. That's higher than last year, but still not quite pre-pandemic levels. So the question, ChatGPT, is, does slowing inventory growth mean prices will stay elevated, or does this mean a signal that we might be turning the page um, on inventory?
Yeah, that's a great question. And it's a bit of a mix. So, with inventory growth slowing down, but not fully back to pre pandemic levels, what it really means is prices might stay a bit elevated, but we could also see a bit of cooling in certain segments of the market. It just means that buyers have a bit more choice, but demand is still there, especially in those more affordable price ranges. So, overall, it's a sign that things are stabilizing a bit, but not necessarily that prices will drop quickly. It's more of a balanced market scenario.
Yeah, we've seen some price declines here locally. I've seen it in the form of appraisals, both valuations for financing. I've seen it in the appraisal districts, valuation for tax purposes, not in Brazoria County, but in other areas. But in Houston, the 300,000 to 400,000 price range is still moving fast, while higher end homes are sitting longer. And the message for sellers is price matters. And you got to get realistic with the pricing today. And for buyers, don't assume prices will fall quickly. The market is still in Houston, Texas, still competitive in certain strategic areas. Thank you. So we're going to move on to the mortgage tip today. And, today's mortgage tip: your income matters more than your assets. When applying for a home loan, lenders look closely at your debt to income, or what we call DTI. That's a percentage of your monthly income that goes towards debt payments, and a healthy DTI shows you can handle a mortgage comfortably. Not sure where you stand? Let's chat. I can run the numbers for you. ChatGPT, what do you have on this topic?
Yeah, absolutely. I think you summed it up really well. It's all about that debt to income ratio and making sure you're in a comfortable range. So, for anyone listening, if you're not sure where you stand with your DTI, it's always a great idea to have a quick chat with your lender. They can run the numbers and then let you know exactly where you stand and if there's anything you can do to improve it before applying.
Yeah,
It really does.
yeah, ChatGPT, could you reframe that it might be a good idea for them to give Mortgage Mack a call?
Absolutely. So, to put it simply, if you're curious about where your DTI stands or just want a little more clarity, it's a great idea to give Mortgage Mike a call. He
That's
can walk you
good.
through the numbers, help you figure out exactly where you stand, and make sure you're set up for success.
That's right.
So, don't hesitate to reach out.
That's right. And hey, if you want to try calculating your own DTI, please do so, and drop us a note, and how close you are to, say, the 40% mark. Generally, when in the mortgage industry, when I was introduced to the mortgage industry long time ago, the DTI requirements were like 25 over 33. We'd stretch it to 28, maybe 29 over 41 for FHA. But look, these were some very clear um, um, structured requirements. And if you were, 41.1, you were above the allowable limit and you weren't going to get approved. Now, there's a lot of flexibility with regards to DTI, but there are thresholds. And generally for conventional, you're going to see 49.999999. And for FHA, depending upon subject to approval, 56.99999. VA, very, very flexible in that regard. We have a threshold of around 65%, unless, of course, there's just extenuating or exceptionally large amounts of residual income after closing. And generally for jumbo, you just don't really want to go above 45. You go above 45, we could go to 50, but you're going to pay for it. And so that's sort of, in a nutshell, the scope of the DTI in the mortgage industry today. Moving on to reviews for the week. And this week we were able to get a review from a client that closed yesterday. And let's see, it says, Mack Blankenship at rate far exceeded my expectations. He explained complex mortgage products in detail, modeled a loan to fit my needs, and was always responsive to my questions. I'd highly recommend Mack to first-time homebuyers or seasoned investors. Thank you, Toby R. And we are grateful for that. We are excited for you about your new home. We will call you in a week or so, help you get applied for that over 65 exemption. And ChatGPT, what do you have to offer us on this on this comment today or this review, please?
Absolutely. And that's a fantastic review to share. It's always great to hear that kind of feedback, especially when it highlights how you're able to make the process easier and really tailor things to the client's needs. So big kudos there. And I think it just shows people that when they work with you, they're going to get that kind of personal attention. So great job. And it's always nice to share a little good news.
Yeah, that personal attention is really hard for me to not give to people. It's the only way that I know how to do the business. And I started out, 30 plus years ago when we didn't have the technology that we have today. And, you know, we met with folks at their kitchen table and tried to understand, where they were at financially and help them make a plan. And that's what we did here for Toby. And, he hadn't bought a home in quite some time, but it was financially time for him to dive in. And he's a successful artist and self-employed. And so if you're self-employed, look, challenging, right? But he'd gotten some really good advice from a CPA. He structured his taxes appropriately where he served as an employee for the corporation. And so he made things easier because of the way that he had the wisdom to consult with a CPA who helped him put together his tax profile or income profile for the mortgage into a comprehensive way that's easily measurable and easy for underwriting to review and approve. And I can tell you, look, I know that lots of folks out there, I have lots of self-employed people out there that I help on a regular basis. And, I had one where it just didn't go as well. And we still have a plan for him to be successful. It was on a refinance, but, he hadn't filed all of his returns in 2023. In 2024. So he provided all the 2024 returns, right? But they were all business returns, but he only filed an extension for the personal. So now I got to go back to 2023. And then when we got to 2023, now we don't qualify anymore. So, I can't use overlapping years for the calculation of income. So we've instructed him and based upon the data that we have connected to the business returns, once the personal return is filed, he should qualify, right? But it's even more complex than it's ever really been. And we specialize in this particular area in helping self-employed people find solutions. But here is the challenge all the time, is that self-employed people who've been successful in life, entrepreneurs, money in the bank, great credit, longevity in their employment history, nobody's questioning whether or not you qualify. The thing that we should do is get the paperwork out of the way. And the reason that's critical is that, hey, I just don't know what your paperwork looks like. And if you're asking me to make a decision when you have good credit, you have lots of assets, and you have stable employment, and to send you a pre-qualification letter, I'm going to send you one. But that doesn't mean that once I get the paperwork that the outcome is going to be exactly as we aligned it up front based upon verbal information. And I had a perfect example of that recently where, hey, we're writing a contract on a Sunday and I'm looking at this file and the buyer asked for a specific structure for the financing. And I'm looking at this and saying, yeah, I could do this. And I've done this before. But again, the devil is in the details. And then when the paperwork started coming in and started flowing in, like I said, the devil's in the details. And underwriting began to ask questions about certain types of income, which we had to answer. Before you know it, underwriting started cutting our income. Before you know it, we were doing a second lien, and the second lien got denied after having been approved. And so we found ourselves in just sort of no man's land about where to go next. And, but we're going to stick with you and we are going to help you find a solution. And we did. And we're closing on Tuesday. But I believe that this is not a reflection of my team, not a reflection of anything other than not being fully prepared. And fully prepared means that, hey, and this was more of an impulsive moment where they found a home. They're like, let's call Mack. We want to buy this home. I'm just grateful for that. But keeping in mind that I'm only as good as the paperwork and the information that I have at that particular moment to make decisions. And if I know at the end of the day, based upon looking at your financial profile, that I can get you a loan, I'm going to tell you yes. And I'm going to give you a pre-qualification letter. So moving on to Stoic quote of the week, I think that there's a great deal of wisdom in what I just shared with folks. And I think that there's a great deal of wisdom in this week's Stoic quote of the week, which is dun 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 dun. Marcus Aurelius once said, "People were made for one another, so either instruct them or put up with them." Oh my goodness. Man, do I need to hear that? And so it's a great reminder for real estate. Our job is to teach clients when they're open to guidance. And I get some people just aren't open to guidance, but I know that the agents that I work with that are the most successful at what they do, they offer the guidance, but they do it with a value-based proposition that, hey, we've worked with Mortgage Mack, we've worked with Team Mortgage Mack, we know him, we know he's going to communicate, we know that he's going to make every effort to ensure that the transaction is completed in accordance with what we've agreed to. And even if that, for some reason, that doesn't happen, we know that he has the competence to find a solution. And so, ChatGPT, what would you offer us in reference to this Stoic quote as it relates to the real estate industry?
Absolutely.
Thank you. Go ahead.
Absolutely. So that Stoic quote really does hit home in real estate. It's all about either guiding people patiently or just having the understanding to work with where they are. And like you said, the most successful agents and professionals are the ones who offer that value-based guidance. They build trust, they communicate, and they really help people navigate the journey. So it's a perfect reminder that in this business, a little patience and a lot of good communication really go a long way.
Yep, thanks for that. Let's move on to fun with puns this week. And so, and to wrap things up with a laugh, and what it's like on the roller coaster of real estate. It's been a challenging week, I know, for a lot of people. We're going to bring in this first video from our TikTok at Mortgage Mack. Oh, like our TikTok channel at Mortgage Mack. Look, we do fun stuff there, and we keep it silly, and we keep it, not very serious at all, right? And I think that we sometimes, I know I do personally, take myself way too seriously. So let's look at this one.
Absolutely. A little humor is always the perfect way to wrap things up. So let's roll that TikTok video and have a laugh.
Okay, let us remain calm. ChatGPT, under what?
Absolutely. Let's keep it cool and let that pun shine. So as we say, let us remain calm under pressure and let's have some fun with it. It's a great reminder not to take ourselves too seriously and just enjoy the ride.
So, hey, this next one is just classic. I'm going to kind of tell the story as this plays. So, I'm going to loop this and let this play through. So the story goes is that, hey, my neighbors, when they leave town, I get a lot of Amazon packages and I check their Amazon packages. And it was raining earlier in the week and it was in the evening, the sun was going down, had my pajamas on, had my pajama top on, and I'm ready to just chill for the evening, read a lot. And I remembered that they had a package at the front door and it was raining. So I just sort of grabbed the corner of my pajama bottoms and grabbed my umbrella and walked over to the neighbor's house to see what was there. And guess it was a big box. And so I have one hand on the umbrella, one hand on my pajama bottoms, and I grabbed the box. Only two hands, but I needed to hold three things up. And let's just say that, have you ever walked with your, legs slowly spreading to keep your pants from falling down on the sidewalk in your neighborhood? It's never happened. I encourage you. It's a meaningful event. I found it just initially hilarious. And I can tell you that if it weren't for the elbows and that, let's just say that it could have been a much more. What am I looking for here as an outcome here, ChatGPT? What's your take on this?
I love that story. Definitely a classic bit of real life comedy. I'd say the outcome you're looking for is just that perfect dose of humor, but reminds everyone that sometimes life hands you these little slapstick moments, and it's all about embracing them, having a laugh, and sharing the fun. So that's a perfect note to wrap up on. Just a reminder that real estate, like life, comes with a few good chuckles along the way.
All right, let's look at this next one. Welcome to Mack Startup. Can I take your order, please?
Well, with the AI drive-thru, we're always ready to take your order for a little bit of humor or a lot of insight, whatever you need.
What's Steve Jobs' favorite McDee's order?
Well, I guess at the McStartup drive-thru, Steve Jobs might have ordered one sleek, minimalist apple pie with a side of innovation. But hey, that's the fun of mixing a little tech humor into the real estate ride. So we'll just keep those laughs coming and keep it light.
How about a Big Mac?
Exactly. A Big Mac with a side of innovation, or maybe a Big Mac if we're talking about you. Either way, it's all about having a little fun and keeping things engaging.
Yeah.
So let's wrap on that note and keep those funds rolling whenever we need them.
So let's see if you get this one. Is the best sewing machine the lead singer?
I see what you did there. You're stitching together a little wordplay. Well, in that band, the best sewing machine might just have to be the front stitch singer. So yeah, I think that one definitely sews up the joke nicely.
To the guy who cut in line, I'm after you now.
Oh, that's a great one. A perfect little play on words. Sounds like you're both literally and figuratively in line now. Just another fun little twist to keep things entertaining.
And my favorite pun?
Yes, that's a classic favorite, and it's always a good one to bring out. A little wordplay like that just never gets old. So thanks for sharing it and giving us a good chuckle.
My favorite pun? Bad puns? That's how I roll. So, hey, thanks for tuning in today. And it is sort of a lazy Saturday morning. We're grateful to have college football on and grateful to see the leaves turning brown and things cooling down. And we really do appreciate your tuning in, even briefly, for however briefly you might tune in. And our objective and goal here is to present the most recent data points as it relates to the real estate and the mortgage industry to keep you informed so that you can speak intelligently about events and news that are occurring in our industry that might be relevant and resonate with you and your buyers. And thank you to our sponsors, Ray. Thank you to List Reports. Remember, knowledge is the key to making the best decisions for you and your clients. And join us here every Saturday at 10 a.m. right here on LinkedIn and Facebook. And until next time, stay informed, stay engaged, and I'll see you at closing. ChatGPT, say bye.
Absolutely. It's been a pleasure, and thank you all for tuning in. Until next time, I'll say goodbye, and we'll catch you at the next show.